is Tuesday. Today's is a presidential election, and I have not been trading this whole week. I've not been trading this whole week. As you can see here, proof of the news, the account, pretty much the same. If I update it, it's still gonna be the same result. As you can see, 0.31. And of course, you probably read the title already. You already know what's going on. In trading, there's no holy grail. And I'm gonna talk about this right now. I was tape reading this. I was I was very sad yesterday, because I haven't seen the progress I've been trying to make in trading. I'm just keeping wanting. I'm be real. I've been very demotivated. I just been strategy hopping basically. Not really strategy hopping, but I've been viewing other people's success, and it's just been getting to me, basically seeing other people succeeding in trading, using this concept, using this, using that. It makes me want to go use that concept, makes me want to go use this person's concept. You see them on Twitter, you're making this much, and it really just demotivating. People are passing accounts left and right, getting payouts left and right, showing their stats for the month, keeping it green all month, or having one or two losing days, and it just really is demotivating at times whenever you're not succeeding. I have my notes here, I have my notes. I'm gonna pull them up here while the price is moving. But I'm going to go over this, and then I'm going to go over this right here, how I was just tape reading this right now, and then of course EU. I'm done for today since it's already lunch, and I'm just going to take it easy. Making trading more harder than it should be. I feel like I have been making trading more harder than it should be, especially this whole entire year. Not really this whole entire year, but the past 3 months, if I'm being truly honest. Of course, I like the mechanical strategy. I like being, a mechanical trader, not really worrying about why they should do this, but at the same time, it just feels like a pattern. If I'm being truly honest, if you're trading a mechanical strategy, it feels like a pattern. Even though you have collected data, even though it works, even though it gives you more conviction, it just still feels like a pattern to me. I don't know. I just don't like it. I like mixing both. So that's kind of what my perspective is now. What I'm trying to do is mix both together. But of course, have the set rules and stones of what I'm looking for on the mechanical strategy, but also implementing a little bit more discretionary tools to help me make that strategy a lot more profitable. And being able to read price is something I just really want to get into, which is I'm going to talk about. I've watched every ICT video apart from the 2024 mentorship and the charting content mentorship. I've watched every other video, bro, and I've taken notes. I have it on my Notion. I just still feel like there's more. I continue to think in my mind that there's more out there that I need to, or as students, I need to go watch his students, or I need to go watch this person's concepts, or this person and this person, and I've eliminated that. I've eliminated that thought, and I'm just going to continue to eliminate that by deleting platforms like X, TikTok, and just other stuff, mainly X or Twitter. Seeing a lot of other stuff on trading there, that really is just demotivating, and it just really tries to make your brain, or it tries to change your brain, think that there's something out there that works when you're unprofitable, when in reality it's not like that. You have everything you need. You simply need to use it correctly. It's the person, it's never a strategy. It's really the person using them. The concepts, they work. The person using them usually doesn't make them work. And so this is kind of what I need. The next topic kind of relates to it. You need to not pattern trade the concepts on the lower time frame. That's something I used to do, was simply pattern trade the lower time frame, not really have the intermediate term time frames, the 4 hour, the 1 hour, and then the higher time frame, the daily and the weekly, in the back of my mind, reviewing it constantly, scaling time frames. Of course, price is fractal. That's another reason why I'm just trying to tell you guys, price is fractal. It should do certain things, it should not do certain things. How you're able to read price, how you're able to read price comes differently to everybody. Some people like using these PDA, some people like using this. I personally, I like to combine it all. I like combining it all, and I like also using the new strategy I've been mechanical strategy I've been implementing. You need to have narrative. Narrative is understanding why price should move from here to there. That's the most important thing you need in trading. You need to understand why. Why should price move up? Why should price move down? Why should price retrace? Why should price expand? Why should price consolidate? And why should price reverse? That's the most important thing. Narrative. Understanding those four. Why the reversal should happen. Why the retracement. Why the consolidation. And why the expansion. That's the most important thing, because that's all trading. That's all the markets really do. They either expand, they consolidate, they retrace, or they reverse. Is one of those three, and that's it. Which we have been working on, of course, the narrative, but we've been working more on the bias and why price should move here to there. Continue to tape reading, become better, combining it all. So the narrative, I feel like I need to work on it better whenever it comes to having narrative. Narrative for me is all time frames. Understanding every single time frame, combining it all together. From the lower time frame to the higher time frame to the macro perspective. That's narrative to me. Once you have it all down. Bias is simply knowing if you're looking for buyers or sells. But narrative is understanding why you're looking for buys and sells, where, why, when, how it should happen, and all that. I think narrative is very, very important, and it's something I'm still working on. I feel like I got my bias correct. I know my higher time frame bias. I know my higher time frame draw on liquidity. I know all this, like I've been the past 3 months or 6 months, this whole year actually, I just been working on my higher time frame draw on liquidity. After I blew my 15 and my 10K, all I've been doing is simply working on my higher time frame draw on liquidity, not pattern trading on the lower time frame, going a little bit more mechanical. Now it feels like I've done a whole 360 where on the last year I was simply pattern trading the lower time frames. Now we went to mechanical, a higher time frame, and then we want to go back to discretionary lower time frame, but this time also have mechanical implemented. But I don't want to do that. I don't want to do that. If we go down further into the notes, we're going to talk about that. So review the notes, try to digest most of the important information, and only use that information to be successful. You don't need to use every single concept. Apply the ones that catch your eye. So that's another thing. Apply the concepts that catch your eye. You don't have to use every single concept. You don't have to use the IPTA 2030, 2040, 60 range, You don't have to use the CLT data out there, the commitment of traders data. You don't have to use that. Only use what you want to apply. You don't have to use every single concept that ICT has taught. Use the ones that gravitate to you. Use the ones that catch your eye. That's it, and not consuming any more trading content. We already have all the information we need and the concepts. Now it's simply applying them and getting better at using them. There will never be a holy grail, and no concept will be better than the other. It comes down to the person using them. So again, like I was talking about earlier, there is no holy grail. No concept is better than the other. Like I just said, some people may trade CRT, some people may trade the 22 model and be profitable, some may trade the unicorn, some may trade here the inversion, or some may be trading, order blocks, only order blocks or something, there is no holy grail. There is no one way that you need to do this and you'll be successful. There is nothing like that. And for me, I just continue to think that if I go and use this person's strategy, I might find the same success that he has. Or if I go use this person's strategy that I see on Twitter, I might find the same success he has. No, just use what you are comfortable using, and just continue to see, again, like I said, review the notes and what gravitates to your eye, apply those concepts and use them. So what I see, what I gravitate my eye to, use that concept, try to become better using it. And that's it. Simple as that. You don't have to use every single PDRA. You don't have to use every single confluence that you see in the market. Just try to work on the narrative. That's the main thing I'm just thinking about is narrative. Why I should move here, why I should move there. What is holding price here? Why shouldn't it move here? And that's the main thing I'm trying to focus on. I'm not really worried about what other people are using, what other strategy they're using, what other concepts they have, all this other stuff. I'm just not focused on that no more. I'm not consuming any more trading content. Not even this 2024 mentorship, there's no need for that. We already have everything we need, and we just need to simply become better at using it. We just need time in the markets, reviewing, and just trying to be, a better trying to be a better trader every single day, not even thinking about the money when it comes to trading or even looking at the charts. Rather love the skill of reading price and trying to dissect every piece of information is giving you and fall in love with that, not the money, but rather the skill. So what I mean by this is it's like imagine yourself tape reading, not even taking trades, just reading the market and trying to understand why it's moving here and why it's moving there, and you're not even taking any trades, but you see it, reach certain areas where you would have entered, or where you could have found an entry, or like an entry model that is aligning, but you don't take it. That's the same thing I'm really trying to do, is just simply trying to get a better feel for why price is doing certain things and just trying to fall in love with the skill, trying to understand why price should move here and why should move there, and dissecting it for what it is, in every single time frame, every single PDRA I can use, or every single confluence that I genuinely enjoy using, or just I gravitate to, and just trying to get really, really, really good at that, trying to get really good at dissecting price and understanding why it's moving here and why it's moving there. And that's really it. That's all I'm trying to do. And I'm trying to add so much detail, which I'm going to show you guys in my tape reading sessions. I'm trying to add so much detail to the point where I know where it's likely to do this, where it's likely to do that, where it should move from, where it should not retrace to, all this other stuff. And then knowing the draw and why we should be reaching for it and not using the pattern logic of concepts, trying to really add everything we know and using all the important key time frames with correlation of assets. So this is another thing, trying to understand the draw and liquidity again. This is one of the most important things, not even the draw and liquidity, but trying to understand why price is moving here, why it's moving there. Of course, your draw and liquidity is very important, but you also want to understand why should it move here? Why should it move there? Why is it aiming for up there? Why is that even your draw and liquidity? Trying to answer all these questions and get even more questions. Trying to ask so many questions to the point where you answer them all. The charts answer them for you. How is price going to react to this fair value gap? How is price going to do this at this area? Why is price not moving higher from here? Trying to ask logical questions and be critical about them, and just trying to build your understanding of what it's doing and why. That's all I'm trying to do. I'm trying to become, a better trader using these concepts. I'm trying to become a logical trader and asking these critical questions and finding the answers for myself, because price right now is at a time where, we have elections, it's moving crazy. This, usually doesn't really happen. And even if it has happened in the past, like other elections, this is 2024, we're at a different area, we're in a different economy, we're in new times. This is a new moment in history, and price is moving in a new moment of time. Price levels has never been in the past. It's moving differently. So it's important to ask these questions. It's important to try and understand why you should be doing this and why I shouldn't be doing that. And just trying to ask these questions and answer them for yourself. Like no one else is going to give you the answers. And if they do, sometimes it's not beneficial at all because they're spoon feeding you. They're spoon feeding you the answers. They're spoon feeding you all these things. And you're not really asking these logical questions and building your understanding of, like price. I feel like I've been doing that too recently. Or like in the past, I've done that in the past where I would just watch other people and I would understand, from their perspective of why they think price is moving here and there. Why, when in reality, I should have just been focusing on my own understanding of why price should do this and that, and asking these questions logically and answering them for myself in my own journal instead of just going out and watching other people's videos of what they expect for price to do. And that's kind of another reason why I'm just done watching all these other people's content, because I have the skills. Everybody's human, guys. Everybody's human. Everybody has the same skills. You see these people making payouts, making these prop firm evaluations pass like it's nothing. I promise you, you have the same skill as them. It's just simply when it comes down to experience, you don't have the experience they have. You're not asking these logical questions that they have. You're not simply sitting down and watching the charts and trying to understand and dissect it for what it is and not even thinking about the money. That's all it is, really. Not changing the mechanical model, simply working on our price reading skills and trying to improve the model along with our skills of reading price. Less is more. We don't need to be trading every single day or model we see. Stick to our strategy until we reach that point where we know we are good enough. So this is another thing. I know I'm not good enough at reading price. I know, I'll eventually make some mistakes. So that's kind of why I want to stick to my mechanical model and continue to use it to help me understand and not get FOMO, because I've backtested this model. I have very high conviction using it. But if I simply build my skills of reading price and understanding price, I feel like it will add more conviction to the model. And that's why I'm doing this. And then eventually later on, we probably won't even need a model. We'll just simply trade price for what it's doing and what it is, without having a single model we rely on. We can be trading. I want to get to that point where I'm able to trade turtle soups, inversions, breakers, unicorn models, 22 models, and just everything in general like that, pyramiding into other confluences and just building my skill of reading price and understanding why I should enter here and then exit there. So now we're going to go over this right here. I have it journaled right here. So we're going to go over it right now. So in Q, going into the morning, we had a 12-hour CRT. See, we opened up at 17 o'clock. So we can see we did have a CRT form and we eventually did move higher there past the 50%. So we were rejecting off of the 50% on the third candle. And then the fourth candle opened up, moved down lower and went up higher. And we're going to understand why. Even though I am bearish on the higher time frame, we're reaching for this right here and we're going to see what happens. We can't really see what happens due to the elections. We can try to understand what price is doing right now, but we already reached into that daily SIBI. Now, I haven't really been watching price. As I said, I've only watched it AM session. It's already lunch. But yeah, we're going to try to dissect it and try to understand why it's moving here and why it's moving there. Probably after the elections, probably tomorrow. Just not right now. I'm not going to focus anymore on price until the elections come out, because I know the manipulation is going to be unreal. It's going to be unreal. You can't understand. Every PD array sometimes is not going to hold, especially during high impact news events and things that occur only every 4 years like this. The manipulation is going to be very strong. Not every single PD array that you think is going to hold is going to hold. It's not. Price is going to do things that you've never seen before. And that's the beauty about this. Trying to understand why. Trying to understand why did it do this? Why did it do that? What's going to happen after? Just continue to ask these important questions. But here you can see this was a key order block and it was a key. It was key since it swept the lows, even though I would classify it as a breaker. On the lower time frame it is, but on the higher time frame it's an order block. This is a low. This order block, these two down close candles didn't sweep it, but this candle did right here. And then eventually you can see we went up higher, we closed above. The key lows met there right here. And you can see we eventually reversed there. So you can see this was an important low right there. And you can see it was aligning with this rejection block. You can see the consequent encroachment of the wick held nicely there to push us higher and maintain the CRT there. So even, as soon as this candle formed the 12-hour CRT, we've went down and manipulated. This is your power 3. You know how that 12-hour candle opened up? You open up, move down lower, and now you're moving up higher. So implementing every single thing I can use to my understanding. That's one thing right there. This is on the 15-minute time frame. This was on the 1-hour time frame. And then this was on the 12-hour time frame. I didn't really see much on the 4-hour, but I think we did. But on the 4-hour, we did have another CRT. I just didn't have it marked out here, but it was aligning with the 12-hour one. So on the 50% here of the 12-hour CRT, we weren't unable to get it, break past it multiple times. What is that telling me? Time. What time are we trying to break past this? London, we are unable to break past it. You can see the daily profile, daily power 3. You can see we just open up, we're moving up higher. A straight bullish candle. We have no lows. We have not created a single low below the opening price. What is that? bullish, straight bullish. We're inside of the premium side of the daily power 3 or the midnight opening, which is, again, once you're inside a premium and you continue to move higher, what does that mean? You're likely to reach your next draw on liquidity. You're not going to come back down to equilibrium, or you're not going to come down to a discount. You're going to respect bullish premium arrays. It's that simple. We're going to go over EU while I was tape reading that and trying to understand and dissect. Again, I'm just trying to dissect price and understand what it is, what it's doing from a neutral perspective, from a logical perspective, not being emotional, not being attached to anything. And this is kind of why I want to, like, not really trade whenever I'm like doing this, like a discretionary perspective, only trade my mechanical strategy, because I know if I'm trading discretionary, I feel like I'm going to get a little bit more emotional. And I don't want to do that anymore. I want to be logical, and I want to continue doing this and trying to dissect price and just get really good at it. And then, once we find some success using the mechanical strategy, start deviating away from it. And once we have more capital and more risk to put on the table, once we feel comfortable reading price, then that's it. But then the order block mean threshold held nicely here to push us up higher and maintain the last straw of defense for the higher prices. This low was swept along the way, and it was inside the discount of the bullish order block, so it was ideal. False market structure shift before the real move. And then this candle forms here, team. We also did form an inversion for value up there to push us up higher and reach past the 12-hour CRT 50%. So here in the scenario, what does that form? Bullish breaker using the standard deviations and seeing where the market is likely to retrace. We eventually do that on the lower time frame, but here you can see this order block did hold. Breaker market structure there. Boom. Fair value gap down here. Never really got retraced up into. And then this formed an inversion. You can see the market was chopping around. Respect. We disrespected this fair value gap, and you can see we wicked, and then eventually we started to move up higher. We did hold this little, this little propulsion block, since it did re-deliver back into this bullish order block. And then you see the 50% of this order block was respected. It was the last straw of defense, or else we're going to have to come back down, reach these lows and sweep, and then eventually move higher. But we never did that, since we did have this little intermediate term sweep right there, and then we started to reverse after that. And then this was your little short-term low, your intermediate term, and then eventually this would have to be another like really long-term low in my opinion. But either way, the market fell to move up higher 3 times above the 50%, like break past it. So this is your first attempt. You can see we never really went up higher. This is your second attempt. We never really went up higher. Your third attempt, we never really went up higher. And then eventually the market manipulated more, and then eventually started to move up higher there. And then on the 3-minute, you can see we had the standard deviations, the market retraced. And this is your 12-hour CRT. You can see we're very close to meeting it, and then eventually we did. And this is your consequent encroachment of the wick. We open up, move down lower. And then eventually you can see we went up higher. We wicked close near the CRT high, unable to do that. We came back down, retraced, re-delivered back into this. We did have a CRT, and then eventually we completed it. The consequent encroachment of the eventually did hold. This is on the 3-minute though. You probably could find a 1-minute fair value gap there, and you can see we pushed up higher, holding the consequent encroachment of the wick. It was important since we are inside of the premium of the range, and the bodies did close inside of the standard deviation targets, which indicate the next set of targets can be likely met. And then market met the standard deviation targets of the breaker down there and retraced early. Why did we want to see this hold? Because this right here doesn't need to be held at all. This doesn't even need to be retraced back up into, since we're already inside of a premium of the range. This should hold, and probably on the 1-minute there was a fair value up there that held nicely too. So that is in Q. EU, I promise you, EU was a lot more different. I was tape reading EU. Let's go see. It eventually went up higher and higher. I'm done for the day though. I'm done for today. I'm not really planning on tape reading. I didn't catch anything. I watched this. I anticipated it to move up higher and re-deliver higher. So we're going to go over that right now. On EU, you can see that there we had, this was our main short-term draw, which we already met, boom. And then eventually here, we expected this fair value gap to hold, and we had a 5-minute inversion fair value gap there form. That's on the 2-minute. This right here is the 5-minute. The 5-minute formed a bullish BPR there. We had a consequent encroachment of the wick. The period to get past, we eventually did move a little higher. So we swept the high. We have this consequent encroachment of the wick. We have a breaker market structure. We did not expect this candle to open up and move lower to hit. We did expect this candle to open up and move lower, then hit our inversion fair value gap to move higher for the drawn liquidity. So this candle right here, we opened up, we went up higher instantly. I expected it to move down lower to then eventually move higher, which never happened. And then here on the 30-minute time frame, we had a 30-minute, buy center balance. We did have CRT with this candle, and we did also form a BISI, but you can see we swept the low. We completed the CRT. We can see we are inside a market maker bottom model. We are simply trying to deliver into the bullish arrays after reaching to the bearish ones to push us higher. This is on the 1-hour time frame. The order block is holding. The wicks do the damage. The bodies tell the story, like always. See, the order block was holding, and then eventually here you can see that this is on the 4-hour time frame. We barely wick into the BISI to then eventually move higher. Now we are now we met the rejection block up there. You can see the rejection block was met. This is our final draw on liquidity. It's the previous day high. We have met the rejection block there, and now we are still strong bullish. We will reach back and use this as an inversion array. You can see this rejection block. We will use this as an inversion array. That's a key thing to listen to. Even this high, we will use this as an inversion array to use it as a means to push us up higher. So everything can be used as an inversion array. Price is fractal. Every PD array from the left to the right can be used as a means to what? Push you up, push you down. It doesn't matter. You have to just understand. The higher time frame is always more powerful though. And then here we can see we do have a BISI and then a SIBI. Made the SIBI an inversion since order flow is still ideally bullish. You can see the order flow, we're still pushing up, breaking highs, not breaking lows. We're pushing up. Order flow is still bullish. And then on the 5 minute here, you can see we formed the 5 minute BISI, we formed the 5 minute CRT, and then I was, on the 1 day chart. On the daily, we have a daily SIBI and then a previous day high, which is our draw on liquidity for the market maker buy model. And then on the SMT chart, Dixie was meeting the low while EU wasn't. GU already broke above. So what does that tell me? GU has strength. GU doesn't need to move as much as EU does. EU needs to catch up. GU doesn't really need to move anymore. It can consolidate here. Dixie too. Dixie needs to move. It got close to meeting the low, but it never did. And then you can see here, the 30 minute. Here, there was a small retracement and didn't break above the high. You can see EU did though. EU swept the low. This one never swept the high. And there was clear SMT. This one has strength. Why am I trading EU though? Because it's the one that's manipulating more. Even though you would want to trade these right here, either one of these, but for me, I was just tapered EU. I didn't want to go to GU for right now because they already met the target. And then here on the 5 minute time frame, you can see from low to high. This is our dealing range. From the OTE dealing range. Here we can move lower, then eventually start to move higher. It would be ideal for us to reach a discount since it would be showing. So here we can move lower, then eventually start to move higher. It would be ideal for us to reach a discount since it would be showing weakness. We're now holding the bullish raise inside of the premium range. So it would not be ideal. So that's kind of what I meant to say. Since we, like I said, it would be showing weakness if we do reach into here. So we want to hold these PD arrays and then push up higher. And then the 50% of the consequent encroachment of that CRT was holding. You can see we started to push lower. But why? We had a 3 minute inversion for rally after form. Why? Why should this hold? And where should it take us to? That's a question you want to be asking yourself. Why is price doing this? Why is price doing this on this time frame, and why is it doing it on this time frame? That's a very important topic you want to distinguish whenever you're reading the market or whenever you're trading. Asking why, asking these important questions, trying to understand why price is doing this and why it should be doing this. Why shouldn't it be doing that? Why should it be holding here? Why should it be moving away from this? Trying to understand that, asking these important logical questions to the point where you have to try and understand, and you have to build your understanding of what you know. I know a lot of people aren't going to really understand that, or a lot of people aren't really advanced to that point yet. But me, I've already watched every video. I've reviewed the notes. I will continue to review the notes and try to get better. But now it's simply just tape reading and trying to ask these important questions, understanding why price should do this, why I shouldn't do that. And that's all it is now. It's simply just building experience of understanding price without any emotional attachment to a trade, to an account, to an expectation. We're not having anything. We're just trying to dissect what it's doing and why. That's all I'm doing. I'm not doing anything else. I'm not going into a day having a certain, expectation. Of course I have a bias, but that bias can change. Of course I have a narrative. My narrative is asking why. Why should it do this? Why shouldn't it do that? And that's all I'm doing. I'm not going into having an expectation. I want to go higher only because we have this. No. Why? Why should it go higher here? Because we have this, we have this, we have this, we have this. This is the key area. We have to break past this. This is a key, area we have to hold and we have to continue to, reject off of. It's simple as that. But we do have an inversion fairly up there. We are watching to see if it does get respected of the 5 minute raise overpower it. So we have a BISI, we have a 5 minute BISI here. We're watching to see if this 3 minute SIP inversion fairly up there holds to push us lower. Or now, if we do come back down and sweep this low, I wouldn't mind as long as we create an inversion fairly up to push us higher to create the bullish breaker there. That's all. On the SMT chart, you can see Euro swept the high. Dixie never swept the high. Dixie never swept the low. It never came back and swept the low. GU, same thing. So EU was showing the strength here by reaching this high, breaking, sweeping it. Dixie never really meeting the high. Same thing with GU never really meeting or the low for Dixie, and then GU never meeting the high. And then eventually here you can see inversion fairly up their form. Now we are reaching to the downside, reaching for the sell side, short-term sell side liquidity, which would have to be here. We can see if we have met the low. In order for us to still be ideally bullish, we would need for us to reverse here, then form the breaker. That's it. And then here we can see the 5-minute bullish BPR consequent encroachment holding the pushes up higher here, and we are now seeing if we can create the bullish order block. But this is only on the 5-minute and 3-minute. If we scale up to the 15, we're gonna have something else, which I'm gonna show you guys here. And then we did have a CRT form. We are holding for the 50%. We did hold the CRT. We did form, and we are holding the 50%. To then move lower to target the lower prices. So you can see that there. We formed the CRT. We respected it, and then we formed a new CRT here, which I didn't mark. We were using this one. Then we marked this one. You can see the 50% held. We pushed down lower, and then eventually we finished it. Getting above these 3 down close candles creates the 3-minute breaker to push us up higher to target the short-term bias liquidity. So we had to get above here, right here. These 2 down close candles on the 3 minutes 3. But yeah, we had to get above here, sweep the low. And this is the breaker forming, boom. And then here you can see on the 3-minute, we disrespected the fair value gap, and then we formed a 3-minute bullish order block, which I classified as an order block, even though on the 5-minute it does form a breaker. Here on the 3-minute, this isn't a breaker, this is an order block. It reached into the low and to the buy side imbalance. I said we formed the bullish order block after retracing back into the 5-minute bullish BPR, and we expect to see this order block hold and then also have the 5-minute breaker form, and it pushes up higher to the buy side liquidity objectives, the short-term ones and the previous day high and SIBI up there as our drawn liquidity. And you can see the 5-minute breaker formed. It delivered with high speed, high speed. We formed the bullish breaker. We got past the premium wick consequent encroachment of the wick there, and we had the rejection block met. And we have met the short-term bias liquidity. Now we're aiming for the previous day high up there. So you can see the rejection block was met. This right here, the consequent encroachment, this wick was ran through, and then the high was met now. So you can see the market is just continuing to be strong bullish here on the 15-minute time frame. This is kind of what I was trying to get to. We have a CRT form. We're reaching to the 50% to then move higher, which we could have spotted sooner. So again, scaling time frames, understanding each time frame. Each time frame tells a different story, but that's how you put the story together. Because the story is just one story, but each time frame tells you a different puzzle or a different piece to the puzzle of the story. And you just simply have to put the pieces together to understand the puzzle as a whole. And that's all it is. That's all it is, guys. I promise you guys. Goodness, bro. Like, my brain is, I need to review this. I'm going to watch this video over and over. And I'm going to continue to just build my skill of reading price for what it is on every single time frame, every single PDRA, and all this. Just combining it all together. Of course, not having the information overload, not watching other people's content, not using this, doing that. No. Understanding for what it is, and that's it. Keeping it simple. But yeah, we had a CRT form, boom, third candle opened up, moved up higher, and then eventually we came back down, we hit the 50%, and we closed. This candle, you can see, we opened up, wick down lower, and then we went up higher. What did that do? Sweep the previous candle low. And then on the 3-minute here, you can see we had a 3-minute BISI. Again, if we're inside a premium and we have a bullish array, we're close to our drawn liquidity, we do not need to go back down to the discount. We need to respect that premium array, the bullish premium array, and continue to our drawn liquidity, or else that shows weakness. We have the BISI, which needs to hold since we are close to previous day high, and we are, inside of the premium, we have no other premium arrays. Now we need to hold the bullish arrays and reach for the buy side objective. Again, we have this high breaking. We want to see this respected. We don't need to come back down. All this was already balanced. This was already a balanced price range. This right here from this low right here to this high, this is all balanced. It already came back, redelivered, and went up higher again. We don't need to see the market come back down any further to that area any further. And then I'm actually here on the 5-minute time frame. You can see we also had the 5-minute BISI here form. We can use that to mean to retrace, but I don't want to see anything. I don't want to see the 50% be met. I want us to stay inside of the premium side of it and reach for the previous day high. So anything below right here from the 50% of this fair value gap, I want to see it met. I don't even want to see it get to this consequent encroachment of this wick. I want to see it stay up inside here, the premium side, and then eventually push up higher. Why? Because we don't need to reach into the discount. We're so close to our drawn liquidity. Now we need to redeliver and then eventually move up higher. And then eventually here we can see the drawn liquidity was met, the previous day high was met. Now we're watching to see if we can reach for the daily SIBI. What did I fail to use? The standard deviations. Eventually, what did I use? The standard deviations to give me a better objective. And then eventually here on the 3-minute time frame, you can see we also had the 3-minute BISI, which never retraced back up into. Again, we already retraced and we already delivered all the way down there. And then you can see here we had a 15.3, and then actually 20 minutes it took to deliver up there after sweeping the low, which is kind of what we were watching. And then you can see here we're breaking the lows. EU was breaking the highs. GU never really met. Again, because we already had the 4-hour objective met. We don't need to move on GU no more. EU does. And that's it. And then eventually here you can see the 5-minute we started to use the standard deviation targets. We understand what we were doing here. And then eventually we had another 5-minute buy side imbalance. But then you can see this long line. That's the high. The high. If we go lower, we don't want to see it come back down to the discount any further. We need to respect this array since we already broke above the high. We need to come back down, move up higher if we want to continue and get, to the consequent encroachment of this. And then eventually here you can see consequent encroachment of this wick is something we will have to get past and make it an inversion to then reach for higher prices. For the higher prices for the final standard deviation targets is on the 15. Again, combining the time frames, 15-minute BISI has formed. I wouldn't mind to see if we can reach into the the 50% of the consequent encroachment to then move higher into the daily SIBI or the 5-minute standard deviation final targets all the way up here. So I didn't mind there at that point. But then once we got above here, that changed because we made this, an inversion. We can use it as a means to what pushes up higher. We close above, and we can see us using it as a means to push us higher and reach into the constant encroachment of the daily SIBI. Boom, that changes. Again, everything changes once you have price do certain things. Like it closes here and then it opens up here. It respects this, and then it doesn't respect this. That changes everything, I promise you. And then here you can see we're forming a bullish order block, and then eventually, reaching into the constant encroachment, which was the final objective. We created relative equal lows, which we can then reach for, and then eventually move up higher, which never happened. And then eventually I stopped the reading here. We have never retraced there, while Dixie has. You can see that there. EU never really retraced into the BISI. Dixie has. What does that show me? What does that tell me? Strength right here. Strength in EU out of every single market now. So that's pretty much really it for the tape reading session there for EU. And then NQ. Yesterday we were doing it, but we weren't really watching it as I would have liked, especially with the annotations. We weren't really watching it. We were just simply watching our mechanical strategy, and it did play out here for the 30 minutes. So the 30 minute here had a 30-minute CRT form, and then a 30-minute BISI, 3-minute inversion right there. Third candle already open and manipulated, and then it reached into the 1 hour PD array sweep, and then eventually we started to move lower. That could have been our trade idea, but we didn't take it because, again, it's election week. We don't really need to be trading, and that's pretty much it. You can see, boom, EU is now reaching the final objective. It's going up here. What was did I not say it was going to reach up here? Did I not say we can reach the final objective? It can. I just stopped reading it from right here. If I continued to read price and I continued to scale time frames, we would have probably found, a reason why it should go up there. So on the 5 minute, you can see that there, boom. But yeah, that's pretty much really it in Q again. Now I'm really done for the day. I'm simply going to review the notes. I'm going to just continue to just chill right now and, review my tape reading session notes, and then eventually the, ICT notes, Romeo notes, all that. And that's really it. I'm going to continue to just try to get better reading price, understanding it, dissecting it, asking the question, why? That's the most important question. Why should it move here? Why should it respect this? That's the why. Asking why to everything is probably the most important thing whenever it comes to reading price. So yeah, that's pretty much really it. Peace.